like we are doing this May-June paper for, May-June 2004 paper 2 of partnership. Can someone read the question please for me? Yeah, before that, I will tell you what are we supposed to make. We are supposed to make the partner's capital account in the columnar format. That means they want the partner's capital account side by side. We also have to prepare the profit and loss appropriation account. And we have to prepare partner's current account again in the columnar form. Okay, so read the question. When you read the question in AS, always make sure that you mark the important points. Before marking the important points, just see what is the question asking. Read the question, please. Ira, read.
Titus and Ronicus entered into a partnership on 1st October 2003. The partnership agreement contained the following information. First is interest on partners' capital accounts to be credited at 5% on the year-end balance. Interest on partners' cash drawing to be charged 5% on the year-end balance. The profit or loss sharing ratio to be in the same ratio as agreed values of the business transferred to the partnership, i.e. Titus 45,000 and Ronicus 30,000. Ronicus to be credited with partnership salary of 20,000 per annum. Capital account and current account to be maintained for each partner. A goodwill account is not maintained in the form.
Stop. If they
Yeah.
tell you that capital account and current account is to be maintained by each partner, that means we are following which capital method? If you are taking capital account and current account both, that means we are following which capital method?
Is it the fixed one and the other one?
It is the fixed capital method, because in the fixed capital method, the capital balance would remain the same. Okay, capital balance would remain the same and all the adjustment related to partners will be done in which account? It will be done in the current account. So when you do the fixed capital method, in the capital account, you only have the opening balance of capital, you have the closing balance of capital, same thing, and the capital account would only change because of additional capital and because of goodwill. Now, before this, you had goodwill adjustments. That means we had admission, retirement, and dissolution. So we had goodwill part, but now these chapters have been shifted to A levels. So we will do a little part of goodwill, but goodwill is not there for you. Are you all with me?
Yes.
Are you with me? Yeah, read ahead. I will read this. Goodwill is not maintained in the firm's book. That means there was an intangible asset that was goodwill, and this goodwill is not supposed to be maintained by the firm book. Since we are not having goodwill in the AS syllabus, so in this sum, we will not prepare the partner's capital account because it deals with goodwill adjustment. So we will avoid making the capital account. Rather, we will only do the appropriation and current account. Are you with me? Are you with me?
Yeah, miss.
Okay, fine. Go ahead. Go ahead. Read the question. What are the assets and liabilities?
The following assets and liabilities were transferred to the partnership with effect from 1st October 2003. Fixtures and fittings, motor vehicles, stock, debtors, and creditors.
Okay. Now, what are we supposed to prepare? Go ahead.
The following information was extracted from the partnership accounts for the year ended 30th September 2004. Net profit for the year 56,000. Partners drawing. Both partners had taken goods for their own use from the business. Titus $600 and Ronicus $450. at cost. This had not been taken into account in the partnership's books.
Okay. What are they asking us to prepare?
The partnership profit and loss appropriation account.
The partnership profit and loss appropriation account. Now, if you see over here, they had asked that we have to charge interest on capital at 5% on the year-end balance. Okay, that means we need the year-end balance of the capital account. So this I will give you ready-made in hand. The capital account year-end balance is 49,260 and 25,740. Why I am giving you this? Because we are not preparing the partner's capital account. Are you with me?
Yes, miss.
Okay, so now what are we supposed to prepare? Appropriation account. Tell me, appropriation account starts with what?
Profit for the year.
Appropriation account starts with profit for the year, and after that,
After that, you will add interest on drawings,
okay, and less.
interest on capital, and salary if there's any.
Ashita, are you there? Please answer. Ashita? Ashita.
Oh, I was on mute and I was answering kab se. I'm saying it starts with profit for the year.
Yes. And?
Then it'll come plus other income.
Okay.
Income from partners.
Okay. So come on, let's start with the profit for the year. What is the profit for the year?
56,000.
56,000.
Okay, is there any adjustments that is
With
okay, profit for the year is 56,000. In that, what will you add?
Income from partners.
Income from partners. What is the income from partners? We say.
Interest on drawings.
And interest on drawings is how much?
It's 5% on cash drawings.
It is 5% on cash drawing. So for Titus, it is 9,000 into 5%. And for Ronicus, it is 5,000 into 5%.
into 5%.
So what is the amount coming up to?
450 and 250.
450, yeah.
And 250. So what is the total?
700.
700. So this will be 56,000 plus 700. So what is it coming up to?
56,700.
56,700. Then what will you subtract?
Expense towards partners.
Expense towards partners.
Interest on capital.
Yeah, I was just going to say interest on capital.
Interest on capital.
The capital account you gave us, or is it given already?
So I gave you all the capital account balance. Interest on capital is how much percent?
5% only.
5%.
And I have given you the capital account balances because we are not doing goodwill adjustment, right?
Yeah.
So for
How much
Titus,
is it?
it is how much? 49,260. For
And
Titus,
for the
it
other
is
one?
49,260 into 5% on the year-end balance. And for Ronicus, it is 25,740 into 5%. So what is the amount?
I'm telling you.
63.
2463 and 1287.
Yeah.
So this is how much? 3750.
Yeah. 3750.
So we finish interest on capital, we finish interest on drawings. Then this is the profit sharing ratio.
But miss, salary is also there, na?
But then this, yeah, the salary is 20,000 per annum for whom? Ronicus.
Yeah.
So what will I write?
Salary and then Ronicus.
Salary to Ronicus. So this is subtracted. Salary to Ronicus. How much?
20,000.
20,000.
Will be 23,750.
So after minusing, after deducting, what do you get?
32,950.
32,950.
That's the net divisible profit now.
This is
For
the net
residual.
divisible profit.
So then what is residual profit?
Same thing.
Same
Net
hota hai.
profit and residual profit is the same thing. There is some 1050 which is added to the profit for the year in the marking scale.
1050.
1050. And I do
Of
not
what?
know where is that one, why is that 1050 added? Okay, so we will not add it, let it be. Okay, let's go ahead. Now this is going to be shared by the partners in the same ratio that they had agreed. So it is going to be shared in the ratio of 45:30. Yeah,
Miss,
Yeah.
yeah.
that means
3:5.
by 9:30 divided by 5 is 6. 3 3s are 3 2s are. That means the profit sharing ratio is 3:2. Are you with me?
Yeah.
Okay. So share of profit. Please don't forget to put these two lines, okay? Then share of profit for Titus and Ronicus. It is 32,950 into 3/5 and 32,950 into 2/5. Just tell me the amounts.
19,730 for Ronicus. No, for Titus. And then for Ronicus, it's going to be
13180.
13180.
How much for
Yeah.
Titus you said?
19,770.
19,770.
Zero.
And
Yeah.
for Ronicus, it's 13180.
13,180.
180.
So this total is coming up to 32,950.
Miss Vika, I have a question.
Yeah, tell me.
You stop recording.
No, tell the question, it's fine.
From the profit, no?
So both the partners have taken some goods for own use. Both the partners, that is 600 and 450, 1050 has been taken away from the business. Okay, if this is taken away from the business, that means the cost of sales should increase by 1050. Now we subtract it from the purchases.
Yeah.
We subtract goods for own use from the purchases, right?
Yeah.
Means we reduce our cost by 1050.
Yeah.
But we have not recorded these drawings in the partnership books. Yeah? That
Yeah.
means we have not reduced our cost by 1050. If we did not reduce our cost by 1050, that means the cost was more. If cost was more, it means expenses was more.
Yeah.
If expenses was more, that means the profit was less.
Understated, yeah. So you'll add
Profit was
105.
understated by 1050 because I did not record the goods for own use. If I did not record the goods for own use, so now I will, my profits is showing less by 1050, so I will add the 1050. So my profit will become how much? It will become
4,000.
7050. Yeah, tell me, Ashita.
The profit will increase for 1050 now.
Yes, because you did not remove this from purchases. Because you did not remove the goods for own use from the purchases, that means you did not use your expenses.
Okay.
Because you did not reduce your expenses, that means the expenses were overstated and profit is understated. So now you will increase this profit by 1050.
1050.
So these figures will change. This will become 57,750 and the profit will become 34,000 after
Okay.
deducting. Now do this 34,000 into 3/5 and 2/5.
It is 20,400 and 13,600.
So it is 20,400 and 13,600 and your profits become 34,000. This and this should be equal. Are you with me?
Yeah.
Now we will prepare the current account. To prepare the current account, we just need this profit and loss appropriation account. Okay? What comes in the current account? The first thing that comes in the current account is their balances.
Yeah.
So do we have any current account balances for Titus and Ronicus?
Wait, can you go up, please?
Yeah, one. You don't have the sum?
No, I'm seeing your thing. How will I open on mine?
This is Titus and Ronicus. This is Titus and Ronicus. So let's see. First, we can record what we have. Drawings comes on the debit side,
Yeah.
and below that we have interest on drawings.
The current account is for 13 marks.
Yes. So interest on drawings is 450 and 250. Yes. You will have interest on capital on the credit side. How much is interest on capital?
Interest on capital is 450 and 250.
2463. No,
Oh yeah,
interest on capital is 2463 and 1287. Below that you will have your salary. Salary is given to Ronicus. 20,000. Have share of profit. What is the share of profit? 20,400 and 13,600. So everything that was in appropriation account we have recorded. Now we'll see over here. This is the cash drawings. And this is the drawings in kind, that is the goods for own use. So that is also drawing, so it will come over here. How much is goods for own use? 600 and 450.
450.
What was the drawings amount? 9,000 and 5,000. 9,000 and 5,000. Now,
Wait, we only have to put cash drawings in this?
no, all the drawings will come in the current account. So this was the cash drawings and this was the drawings in kind. Now I only have to see whether my current account has any balance or no. Whether we have any opening current account balance or no. So we'll go and see. This was interest on capital. This is interest on drawings. This is for the share of profit. This is for the salary. It is incorporated. Goodwill we are not dealing with. And this is the capital account. This is the capital of Titus and this is the capital of Ronicus. We are not making the capital account. So there is no current account balance, right? We have incorporated the drawings in cash. We have incorporated the drawings in kind. So we will just close the current account. I will close one by one because current account can also have a debit balance. It can also have a credit balance. Are you
Yeah.
first
Yeah.
close Titus account? I see the credit side is more for Titus.
Hmm.
So it is 2400 plus 2463. So this is 22,863. So I have a closing balance for Titus of 22,863 less 9,000
Miss,
less.
but how are you closing the account without balance?
Why? If you start a business in the first year, you
Oh,
don't have
Acha,
balance.
I just started.
It is not necessary that always an opening balance has to be there.
Yeah, but it said in the question that it just started.
They have just transferred the assets and liabilities. Can you see?
Yeah.
Okay. And they've
Hmm.
entered into an agreement on 1st October 2003.
Hmm.
So because they've entered into agreement over here, they have just transferred the assets and liabilities. It means this is the start of the business.
Okay.
Okay.
Yeah.
So now Titus has a closing balance of 12,813. Are you with me?
Yeah.
Now for Ronicus, which side is more? Which side is more for Ronicus?
Wait, I'm doing.
Miss, credit
Obviously, this
side.
side, credit side.
It in current account you cannot say obvious. You have to find out.
Okay. But
20.
credit side, I'm still saying.
That is your luck. So what's the total? Are you
I'm
getting
doing
34,887?
34,887.
Okay, from that you will minus 5,000 minus 250 and minus 450. From 34,887 deduct 5,000, 250 and 450.
Hmm.
What is the amount that you're getting? 29,187. Same thing you have to bring down. Don't forget to bring down your balance. So it is 12,813 and 29,187. So with this, we complete the sum where you had to make an appropriation account and you had to make current account. Okay.
Hmm.